Hello, everybody. So LifeMD reported its earnings and it's now down 32% in after hours trading. I finished listening to the conference call. The management was pretty down, pretty bad mood. That doesn't help the stock price, of course. So what's going on? Well, the main reason why I think the stock is down is they had to guide the revenue growth for the year, the revenue target for the year. They had to guide that down from a midpoint of 271.5 to 252.5. So that's roughly minus 8%. They revised down. They did not up the guidance. They reduced the guidance, right? And you remember I was disappointed when HIMSS kept the same guidance. I should have probably celebrated because there seems to be some turmoil in the ED segment. And I'll get to that in a second. They've experienced the same headwind in their ED segment as HIMSS has. And they say that the issue is now fixed, but this is going to be very helpful because for HIMSS, this is the first time on a call that I had heard Yemi say that the ED business was down. The ED business was down for them too, and that explains a major portion of that reduction of guidance. And another reason for the reduction of guidance is the GLP-1 and the payers not showing up and the payers actually not paying and them having to issue refunds for branded GLP-1 prescriptions. As a reminder, LifeMD does branded GLP-1s only. They don't do compounded GLP-1s because that's the deal for them to be able to offer tirzepatide and Ozempic, right, semaglutide. They agreed to the deal of not selling compounded drugs, and so they're doing everything by the book, and they're submitting insurance reimbursement requests to the commercial payers for their patients, and of course they fulfill the order, and then guess what? As it is usual with the insurance business, the claim gets denied, and when the claim gets denied, the customer cancels the GLP-1, and LifeMD doesn't have a choice but to issue a refund, and so it's a loss for them, and that was always going to be an issue with insurance. That's why I never really liked that they went after insurance. You may remember me not liking them going after insurance, and I think the market is telling you that going the route of insurance is not as good as going the route of trying to fulfill GLP-1 prescriptions to just a rich buyer, a cash pay buyer or somebody who really cares. Like nothing beats cash pay. Nothing beats cash pay, especially when you make a sale and you find out 3 weeks, 5 weeks later that the insurance is not reimbursing for XYZ reason. And insurance, of course, hires droves of pharmacists, they hire doctors, and they have entire buildings. Oftentimes these people are per diem, and all they do is deny claims. That's the job. That's the job of an insurance. And you can imagine with the medical loss ratio that a lot of these insurance companies are going through right now, they are saying no to GLP-1 prescriptions in droves, and these people, of course, go get compounded GLP-1s elsewhere, even though a lot of the providers of GLP-1s are a little, unscrupulous and provide compounded GLP-1 for people who don't need compounding and who don't need compounded GLP-1s. I'm sorry about the ramble, but that's essentially this video. Stock is down 32%, and again, that's like I said, because of temporary challenges that are facing LifeMD. And that those challenges, specifically as mentioned on the call, where for some reason the customer acquisition cost went through the roof and they stopped retaining customers, and that was specifically in the ED space. And so I'm thinking there must have been some very aggressive campaigns from maybe some of the private players, like you may see that ad for Blue Chew, that's a big one. There might have been some pretty aggressive campaign for ED for both LifeMD and HIMSS to notice a drop in the ED sector. So that's actually that's the big issue here. That's the big issue. So because of that, because of his slowdown in ED, because of the turmoil in GLP-1 payers and payers not wanting to pay for GLP-1, they're actually guiding down, like I said. That's 250 to 255 million. That's a down guidance, and the revenue growth is not looking as good as I thought it would be in 2025. In 2025, I thought it'd be better than that. It's looking like 20%. HIMSS looks pretty good now, telling us 45% still for 2025. HIMSS looks pretty darn good. But this is not a problem, right? I mean, I'm a long-term shareholder. I'm sure they'll figure out their own issues. But the EBITDA, you can see we're squarely into positive EBITDA territory. That's 16 million expected adjusted EBITDA for a full year of 2025. This is a company that is cash flow positive. This is a company that is growing, even though it is still not growing as high as expectations that we all had in the first half of this year. If you look at the margin is roughly flat for now. Telehealth gross margin, roughly flat for now. Ad spend went up, and again, I think this is a lot of due to the issue with LifeMD. They're still showing growth across the board. They still have this dead weight that is WorkSimpli. And I know the CEO likes WorkSimpli. He said on the calls before that it's a nice cash flow for them and they should keep it. But I think it confuses the market because it shows you on top line growth, right? When you have headlines and they just report revenue for the company, well, you have 2/3 of a business who's growing up to 27% year over year, and you have 1/3 of a business who's growing at 2%. And so consolidated revenue, put them together, you're showing only 19%. When really, if you sold WorkSimpli, if you got the money, you would be having a much cleaner story to give to Wall Street. I know they are interested in selling WorkSimpli. We just need, growth stocks to come back. We just need VCs to come back. This is, by the way, a SaaS business for office work and PDF. I mean, they need to get that acquired by a company, in my view. That's one of their next steps. The stock will pop once they sell that legacy business of theirs. Looking at valuation, comparing the two for LifeMD and HIMSS, right now LifeMD is obviously still way cheaper than HIMSS, but the delta is not exactly the same. The delta is, it's like 30% cheaper. It actually would look a little less cheaper because I have to see what I'm gonna do with my HIMSS forward revenue growth number. I have left it at 65%. I should probably lower that. I don't know what HIMSS is gonna do, but I should. I mean, this year they're gonna do 45%, but this is next 12 months, right? So I have to kind of think about what we're going to do in first half of 2026. So my guess is going to be less than 65%. I do think it's going to be more than 45%. So HIMSS, keep in mind, would look a little more expensive on this, a little cheaper. Sorry, would look a little cheaper on this spreadsheet as well. If I were to choose between HIMSS and LifeMD right now, I'm torn. I think HIMSS is still the better play because HIMSS is cash pay, and cash pay, and when you're going after cash pay, you don't have bad surprises. Like, imagine if there's nothing worse than spending the money on a doctor visit, spending the money on supplying the patient with a medication, onboarding a patient, and then you find out 3 weeks later that the insurance company of the patient is saying, no, they're not paying for that. And then you have to issue a refund to the patient, A, and then B, the patient leaves, and they go and they get a compounded medication from somewhere else, right? And that's the big tension. I think HIMSS did probably a lot of good strategic planning, figuring out that keeping the opportunity for compounding, which compounding is legal if you have a good reason, and by good reason, I mean more than a B12 deficiency, right? B12 deficiencies, a bunch of people have them. If you have a very, very, very good reason as to why you need a compounded GLP-1, you can still get a compounded GLP-1. It is not illegal. It is fully approved by the FDA. The gray area is when somebody wants a GLP-1 compounded just because it's cheaper. They want a compounded GLP-1 just because it's cheaper, but they are your run-of-the-mill standard patient who doesn't have like a meaningful medical reason for getting it compounded, right? And I am fully confident that HIMSS is not compounding a GLP-1 for somebody who doesn't have a really, really well documented reasons, because they have too much to lose. They are the number one in the sector. They have too much to lose. They would not prescribe compounded GLPs to somebody who is not a solid file. But a lot of the smaller players, they may still issue a compounded GLP-1 for somebody with a B12 deficiency, which is like essentially everybody. So anyways, it's very in a tough spot, and they tried to go with a payer system. And once again, we see companies that rely on payers don't do as well. They don't grow as fast. Why do they not grow as fast? Because you just don't have the velocity of the money. When you have to wait 3 to 5 weeks to find out whether you're approved or not for a drug X or XYZ, you just don't have that velocity of the money. You can't reinvest. You can't move fast. And so anyways, and LifeMD, we discussed that the issue was the customer acquisition cost. There's huge competition in ED. On the call, CEO said that the issue was resolved. And so that's why it makes me think that now LifeMD is gaining back to its former metrics. This makes me think that there was a very aggressive campaign probably in the second half for ED drugs, which took business away from both LifeMD and HIMSS. Anyways, positivity, though, about LifeMD, something that I really like, is the success of their LifeMD subscription. They are saying that they are adding on 50 new customers a day. Think about that. This is a small cap. This is a $200 million company, so this is nothing to sneeze at, and it's probably ramping. And they are very happy to tell us that they're adding 50 customers a day, probably more, to their LifeMD Plus plan. LifeMD Plus plan, $19 a month. This is the Netflix of doctors. You get doctor access through a chat box or through a video for all of your needs, whether it is urgent care, primary care, whether it is, renewing a prescription. Anyways, it's a big deal. So I have to read into the fine print. I have to read into the fine print. The former version of that was one visit a month, one doctor visit a month. Here I'll have to read into the fine print. I'm sure the fine print limits, right? You can't call in every day and see the doctor every day. That would not be profitable. So one has to read the fine print. But this is very similar to a phone plan, right? You have unlimited internet, but then you read the fine print and you find out it's 50 gigabyte is what they mean by unlimited. So there's a fine print to this, but nonetheless, $19 a month to have access to a doctor at any time you need it. I think it's a pretty compelling, disruptive offer that they got over there. And so I like to hear that this is ramping. I think this is the direction this should go. This could be a major differentiator. I don't know if HIMSS, for example, is able to do that. The only reason they are able to do that is because they hire a bunch of actual MDs in New York City who come to the office and work every day and then go home, and they do telehealth all day long. That's the reason why they're able to do that. And so I think this could be a very, very interesting business. I'd like to see them refocus on their core business. ED is not a problem. I think a lot of the pain that we see with GLP-1s right now, whether it is HIMSS or LifeMD, frankly, I would have been just fine without that pain, because I was into both companies long before the GLP-1 story developed. And so to see the volatility, the added volatility of the GLP-1, I mean, I'm totally used to volatility. That's fine, but it's without GLP-1s, this stock wouldn't have done a minus 32% move. It's just because they've become hot stocks. They're heavily traded. And so that's why being mindful of your entry points and your exit points, assuming you want to do some more short-term trading, being mindful of that is very, very important. People who exited LifeMD in the $14, $15 range, they did a really good job, but that's the job of a trader. That's not the job of an investor. I am an investor. I'm holding this company for the long run. I hope they turn around, and hopefully they will. But minus 32%. This is not the first time I say this, but this is I think this is a fair drop. I think this is a fair drop in stock price for what they reported. So, anyways, this was not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.